So, guys, have a great day. Don't get margin called. I will see you all very, very soon. Yeah, have a good one. See you soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Interesting morning so far. Just coming right out of the gates with a big old flush to the downside. I was, and still I'm actually sitting at some fresh highs in the portfolio. I would say part of this is probably good because of my hedges, which have starting to look a little bit better. P&L wise today is coming from SLV, so silver, up around $3,500 on the day. Baidu and Alibaba had a nice rip to the upside. I did update my Pulver alerts. I got out of my Baba trade. Sounds like I was talking to a baby. I got out of my Alibaba trade at 126 yesterday. We ripped up to like 137. I had a feeling we could either go up to the 130s or drop down to like 115. It obviously went up and had that momentum carried even further, which is fine. I closed out the trades on Alibaba that were just owning the shares. Now I just have a bunch of option trades in for the additional income. But Baidu making a nice little run. I'm up a couple grand there. Netflix, nice little drop here and a big swing in profit. So I want to take a quick peek at this one. I've got the 1030, 1040. Netflix dropping is actually fantastic. If I get some net profit on that one, I might end up taking it today. Okay, I'm upside down $50 on this one. This is a broken wing butterfly, but it's looking a lot better. So here's the analysis on the trade. So there's my P&L. This profit trap, it's going to be close. If I can hopefully see Netflix down below, let's say we get less than 1030 and stay there. If we stay there through this week and this weekend, this P&L actually might start coming up into profit. And I'm going to see if I can get a slightly bigger winner on this next week. But I need this to stay. I mean, my pin price is 1040. I obviously, if it flushes lower, that's fine. But coming into the weekend, let's see how this thing looks. But that was a nice swing, in my favor. Let's go. What else? JD, we're above $40. I think I'm just going to let that one get called away at 39. That's to next week's expiration, I believe. SPY's up with some hedges, up $1,100 today. Bitcoin I added some ratio spreads and some credit spreads in yesterday. Las Vegas sands up a little bit. Japanese yen still doing pretty well. This is good. My E-mini futures up about $900 on the day. Philip Morris, I'm going to let that one go. I think I just made the decision. I talked about a lot in my live session yesterday afternoon around 3:30. I've got a big chunk of profit here. I've got about 89 grand on MO. It originally just started out as like a dividend play and then turned into like a $10, $11 move in my favor in addition to the dividend. So the buying power that I'm going to get back by letting this one go by March, I'm okay with letting it go. I didn't roll anything. A lot of these are all March expirations, which I'm okay with, and then I can reestablish new positions. So anyway, fresh highs on the day. That's good for the portfolio. I do have some losses on the day. It's not like I'm just sitting here like, oh, everything's awesome. I've got Walmart down $2,900, but I'm still up $5,700 for the position. But Walmart had a huge gap lower. We had earnings on Walmart, and I'm pretty sure that that was positive, and yet we are down quite a bit. Now, I look at a lot of this as a drop into, maybe the reality check of this thing has gotten so overstretched. We're above fair market value. I think that Walmart is a little bit overdone and overvalued. I wouldn't be surprised to see, the market maybe find some type of dips to buy, which I'm okay buying too. I actually wouldn't mind reestablishing another long position on Walmart. But where? I mean, honestly, if Walmart sells off and finds some dynamic support, I might just do the good old cash secured puts. And let's see if we get down to like $90 and I start selling some like 80s and 75s. I'm good. I'm good with Walmart at that price point. It's not like it's a huge dividend maker, but it is definitely in the consumer defensive space. And even wealthier shoppers now, like higher demographics and socioeconomic shoppers, are still turning to Walmart if they need cost savings. So anyway, that's a big move on Walmart today. UNG, which is my natural gas position, we had a gap lower, so that's down slightly. CENX is all naked puts for aluminum. That one's fine. I'm up like $13. So, I mean, even though these are down on the day right here, down in the day, the overall position that's open is still positive. So it's just taking a little bit to offset the gains on the day, which would be here, and a little bit better. So that's where I'm at for the day so far. Felt like a little bit of a chase this morning. This is a kind of unusual way to open up the market today, just a big swing lower. I think we're kind of stuck between it. We have a big monthly expiration tomorrow. We're kind of stuck between, are we going to come back and crack the highs, or are we going to come down and flush lower? Are we going to finish right in the middle and the market doesn't do anything? Obviously, either of those scenarios can play out. So we could go back up and try to fill today's gap. We could flush lower and have a rundown into the low 600s. We could finish this week red. So even though we had a green week as of yesterday with hitting some fresh all-time highs, what we just did with this flush down this morning is we took out Wednesday's low and Tuesday's low, and we took both of those out pretty convincingly. So now the question is, if we sweep those lows, are we going to come back up and work our way higher? Is that a dip that the market's interested in buying? Or is this a sign of take the low, and then we have a little bit of a pullback and then another flush coming back into maybe some of these inefficiencies? We don't really have a ton of gaps out here, except for maybe that, which again is like a pretty nasty flush to the downside. This is exactly why I've been cautiously bullish. This is why I put in some hedges where MES has been my best source of hedging. So let me go to this chart here on MES. MES is micro futures. And so I have a bear put spread as well as basically it's a reverse iron condor, where I'm looking to see if this is going to go somewhere directionally, one way or the other. I'm trying to make some profit here. And if I get a simple flush down and find a bar count here that I've been watching for the last month or so, and we're now up 300 plus bars on the S&P, ES, MES, XSP, SPX, all those bar counts are pretty high, then I'm taking a very small risk. This one's out to April, by the way. So these are April expirations, which gives me all of March into April. Where does price go? If we get some direction, I can make some money. Okay. All right. Nasdaq poke the highs this week. We saw the QQQ poke the highs, the QQQE poke the highs. Again, hitting highs and also responding to that. This looks like a bit of resistance compared to these, election lows. This is actually the election low. If we're going to fill that gap, that would be, I think, a great spot. I hope we can fill that gap. I hope we can come back and find some attractive levels. We've had a lot of closes above the 200 moving average for the last like 300 plus bars. Now, I don't know. Are we going to just shrug this off and say that this market is just so eager to buy the dip, it just buys the dip? Maybe. But we're sitting at an equal high, and there is support here and here. So if price is a little bit more to the downside, then there could be some follow through there, and it would just be resistance and resistance, and we have more range trading, right? Who doesn't like some range trading? Probably nobody, because nobody knows how to trade it. But I do. So I'm just going to be patient. And I've said that for the last couple of months. Here's the Dow, not quite at the highs. Resistance here, another high bar count that I think we're going to find. A little bit of consolidation that maybe continues to happen. If the Dow flushes down lower, it's probably going to weigh on the markets. Where's the Russell at today? Russell down slightly, still not crazy convincingly bearish. Actually, you know what? I might look at a trade on the Russell, see if I can get some puts out here towards like the 190, 195 level. I've been saying this, like, I don't love IWM because 2,000 stocks, you got about 70% of them that aren't very profitable. But I think my fills and offers and liquidity is probably a bit better. It's less cost effective, and I wouldn't mind owning Russell at like 190, let's say 195. Let me check this trade out. So I'm going to go IWM right here. IV rank is at 14, which is hardly anything. Probably not the best time to be selling premium on it at all, but I at least want to see what the trade looks like. So if I go IWM, let's say 56 days or so, that gets me out to April. Okay. So if I were to do a 220 by 215, that's a $5 profit trap. Nope, that's not good enough. I'm gonna have to tighten this up. So if I did like a $3 profit trap, $2 profit trap, okay, 64 cents. I get a $2 profit trap if price falls below 218, and I could put a put where I want it, which would be maybe around this 195 zone. Yeah, it's just not good enough. So basically, it would be like a spaced out 111 where I put in a bear put spread and then a cash secured put. I don't mind owning some IWM, but a 195 put is only offered me 73 cents. I'm not that excited about grabbing 10 cents on the trade and then maybe there's my it's basically a paid for hedge. But if I'm going to do that, I might as well put it up here, right? I might as well put it like, okay, I'll buy the 225 and then sell the 220. Now I get a $5 profit trap and I'm trying to finance that. Well, I can probably do that if I put in a $200 sell put. Nope. Yeah, I don't like it. I think the 13.4 IV rank is probably what's killing me on this trade. It just hasn't done a lot. Now I will say this: if IWM has like a nasty spill and we come down to this level or find some support, way more interested in exact trade that I just talked about with the, I just move the strikes accordingly where I just stay out of the way, generate some income, see if this market has a bounce. Okay. So I guess patience is the key. VIX one day, we went from like 9 and change, spiked up a little bit, starting to fade. Overall, VIX is up a little bit. Dollar index down slightly. Oil back into this chop zone. I mean, oil is probably still good for like a strangle. If anybody's liking this, like, selling above, selling below, price stays in the middle, just grab some profit as it stays kind of choppy and range bound. Obviously, oil is volatile. I mean, we might have a big spike up or down, and that's the hard part about a trade like that, which is why I'm not taking it. But it just continues to be really, really indecisive. And I think that's great for, like an iron condor strategy or a direction neutral strategy. USO NG, we had a pretty decent drop today on natural gas. My UNG position was up to 22.69, pulled back to 21.48. I'm still long in this one, and I'm fine holding that one. Gold, we actually poked some all-time highs yesterday and today. So you can see the wicks right there, fresh all-time highs, but yet no real follow-through. I think gold is just going to kind of work its way up, pun intended, kind of melt its way up to 3,000. And from there, I think we're due for a pullback. I think there's a lot of dynamic support on gold. I'd like to see it. I'm patiently waiting. I might not get the fill that I want, but I'm going to find out. Gold futures, same thing. If I get a pullback on gold, then I'll start looking at positioning for gold futures. Silver's fine. I think silver still can work its way up, also melt its way up towards 36. I'd love that. And that's a big profit target one. I've got some ownership of SLV. Covered calls, I think at the $33, $34, $35 zone. Let me double check and see, do I have my covered calls in? So SLV right here. Yeah, they're covered at 35. So these are out to May, covered it at 35, pulled in like 25 to 30 cents on those covered calls. Also put in a collar trade just in case, put in some naked puts. So, I mean, yeah, I'm up $9,000 on silver, 14 plus year to date. I still like the position overall. Okay, Bitcoin 97. I still like the 91 to 80. I mean, 91 is a strong support level right now. 91 holding nicely. We come back to 107, 108. Yes, no, maybe. Do we break above this? Look, if we're getting to all-time highs, if we get all-time highs in the markets, then there's a good chance we could see all-time highs in Bitcoin. If we're seeing retracements in the markets, we're probably going to see this $91,000 threatened. Maybe it comes back and fills some of these inefficiencies around 80K. I still like, I mean, it's a respectable pullback. I still like positioning for it. A lot of my Bitcoin positions are going to be out to December, January of this year anyway. So anything I do have, I'm just going to take some more positions and just throw them out into the future. Okay. MicroStrategy at 319. Actually, let me check on something really quickly here. I do have a trade on MicroStrategy that expires this week. Let me check on that trade right now. We're at 319. MSTR. So I did the, I think it's here. That is my bull call spread. Let me find it. I'm going to find it and group it. So I have a 320 by 315 and a 360, 365. So that is going to be grouped as newsbreakers. There we go. So this trade right here is upside down just a tiny bit. Okay, so I'm down about $100 on this trade. I'm going to see if this is an expiration for tomorrow. Can we drop to 315? I'm going to check that right now. So 315. If I get a chart alarm at 315 and this activates, then that should help me turn that trade into hopefully a profit. So I got two debit spreads on MicroStrategy. If price hits 315 or lower, then I can turn a 335 debit into close to a $5 credit. So we'll see if price cooperates a little bit more to the downside. Grab some profit there. Coinbase down to 254. Did some out of the money plays here, some ratio spreads. Ethereum not really moving a bunch. Japanese yen, cha-ching. This is what I wanted to see. This is why I was trading Japanese yen futures. It's looking pretty darn good. Profit wise, I know I have time in the trade. This is the only issue, is that I have enough time in the trade that I'm probably not going to be hitting full profit anytime soon. However, I got into the trade for a 0.000055 debit. It's hard to kind of think about like, oh yeah, this is exactly what I want my price to be, but I do know what it's offering for profit. So if I go into my Japanese yen futures position, which is right here, it's up $400. So for my max risk of around 687, if I can turn that into, I mean, this trade is currently up around $400. If I turn it into $700, $800, $900, I'm looking to take some profit. Okay, so I mean, it's looking good. I will probably end up checking this thing, at this high if we have another decent run on Japanese yen futures. Let's take a look at currency strength today. Japanese yen is our strongest currency pair. So another nudge to the upside. Yesterday, Japanese yen was the strongest. Today, Japanese yen is the strongest. This is looking good. If anybody's trading currencies, yen. This is why I'm not trading FX with Japanese yen. I don't think that this is the easiest trade. CAD yen is pushing down a little bit. Okay, fine. My Swiss yen is still short. Or actually, it was still short. I closed out. I don't feel bad about that. We're at the same level as before. I shorted it up here in the swing. It was high, low, shorted it at the 50%. I was going after the lows. I took profit right there, 560 pips. I'm out. So I don't have a trade any longer on Swiss yen, which I'm fine with. I did measure a symmetry move, which is probably going down towards like 164. So if you're still hanging on to this trade, there's probably a few more 100 pips to go, which is fine. Euro yen pushing down again. Again, totally fine. If you're trying to trade this chop fest of Japanese yen and currencies, that's great. I elected to do Japanese yen futures. So I'm long Japanese yen futures. This is paying out really nicely. And I'm also long FXY, which is now gapped up from 61 to 61.63. I own some shares of that. So let's go to FXY. So I've got about $300 of profit on FXY, and I have about $400 profit in Japanese yen futures. If it adds up to a couple grand in profit, I'm going to take it, move on. Happy little trade on Japanese yen. Okay. All right. What else? Brazil, Japan, Nikkei still not really doing much. Japanese yen is fine. DAX finally had a wrinkle in its performance this year with a big drop yesterday. I still think buy the dip is fine, but I want to see the dip respectable. I want to see this 21 or 50, some type of level. I mean, you could put in like a 5-period moving average or a 13-period moving average. I like the 21 and the 50. So this would still be a pretty shallow and pretty aggressive bull market. I think there's still dynamic support there, but I'm not touching this thing until we end up hitting probably a moving average that I think is respectable. So if we had a crazy high bar count, not necessarily, but that's a pretty big stretch away move that I think ends up, capping a little bit of the upside for right now. And then any respectable pullback, I'd like to kind of buy the dip. So my way of trading that would be FEZ. FTSE also pulling back a little bit. Again, really well supported around these dynamic support levels. If you're looking left on the chart, previous resistance right in here. So is this resistance becoming support for the FTSE to catch another bid? Yes, no, maybe. That pullback is going to be around 8,500. DAX pullback levels, anywhere around like 21,000, 2050 would be great. 21,000 would be acceptable. Argentina is still sideways. China made a fresh high. We had the Hang Seng get all the way up to the September highs again, which is pretty nice. Brazil, slightly higher, which is fine. Mag 7 still not doing anything. Apple, they released a phone yesterday. Nobody seemed to care. Amazon, down. I had a feeling I fudged up my expiration on that earnings play last week. It did go to my expected move, but I was wrong on the expiration. I should have went out to this week. That's my bad. But anyway, I'm still covered and rolled, and I like Amazon a lot. If we come back down into dynamic support levels, I will be looking to add some income trades and probably just buying some shares. Google, just slightly going lower. Keep an eye on Google for a potential dollar cost average position. I've got 2 and 3 positions here to average in. I might end up looking for some more income trades like I did here. When we had this first sell-off, I did some income trades. And then we had the quantum computing stuff, and I did some income trades. So I just think this is a pretty attractive gap fill that we just need to see it catch bid. So if Google's at 170, 175, I think we can have a gap fill. We don't have to hit all-time highs, but a gap fill back into 190 to $200 is still a pretty attractive trade. So food for thought. Meta down a decent amount, which I'm pretty happy with. I put in a broke wing butterfly, collected about 50 cents a contract. There's also a $500 profit trap if we come back up to the highs again. That expires next week, so that should be some pretty straightforward profit. Microsoft allocation at 416. I'm back to break even. A bunch of income trades down here, which are looking pretty good. Netflix, sell off and sell off hard. Give me my profit. Don't bother me anymore. But I still have a $10 profit trap here on the broken wing. But I've got about a $20 buffer right now, which is good. This expires next week. So fingers crossed that, if we are sitting at 1020 still in my profit zone, 1030 to 1040 is going to be my sweet spot. So if coming into next week's trading, we're trading between 1030 and 1040, I might actually be able to get that in the profit trap prior to expiration, and fingers crossed that that ends up paying me. I've got potentially a $1,000 profit trap on Netflix, but I'd also be happy just taking the dollar credit and moving on. Okay, Nvidia 138 earnings next week. This is enough. If anybody's paying attention here, there's earnings next week in Nvidia. This is enough to be a big mover in the entire market. Fresh highs in the S&P, fresh highs in the Nasdaq, maybe. If Nvidia comes out swinging with the big push to the upside, I could see all-time highs again next week. If Nvidia somehow gets the disappointing move, or their earnings expectations aren't growing exponentially, and all of a sudden it's like forward guidance, I have no idea. I have no idea. But I do know that whatever happens on Nvidia next week is going to have a huge effect on the overall market. Maybe more so than the last week or so of earnings, more so than DeepSeek and tariff talks. It's like Nvidia is the second largest company in the market. And so they probably have a potential, 1% to 2% swing just on earnings alone. So just buckle up for that. That's probably what everyone's going to be paying attention to next week. Tesla is fine. I'm still just kind of slowly dollar cost averaging. I like Tesla a lot. Actually, one thing I'm going to look at right now in Tesla is we got an IV of 36. Let me look at a potential. I might look at a leap here. If I go out to March, that's out 393 days. Let me see what a January looks like. So if I look at an 8 delta, I mean, this isn't a bad trade. I go out to January, that's just shy of a leap. 190 or 185. I mean, none of these are bad. I mean, let me look at the technicals here on the chart. Do I think Tesla is going to be, I mean, even below 200, it's like 200. I think this thing is extremely well supported in like the 170 to 150 zone. I would be shocked to see it really come back much lower than like 260. 260 to 250 is probably also very well supported. So the point is, I could do like a pretty large credit spread here, which is what I'm going to consider doing. If I look at like a 190 by 160, I can pull in some income there. It doesn't take a ton of buying power. I could also go a little bit wider because I'm willing to own some of the shares. That's kind of my point here. Is like a 190. If there's assignment, I might just take the shares. But this would also keep my IRAs, like defined risk would be a little bit better. So if I went 50 wide, it's defined risk. Let me see what this looks like in a cash account. So if I go IRA right here, it only ties up about $500. Really? Oh, I did. Okay, never mind. That's wrong button. I've got to sell that put at 190 and then buy the 150. There we go. Now I've got some risk on the trade. Okay, so about $3,500 in buying power. Let me go 140, make it 50 wide. I like this trade. Okay, so for my margin accounts, I'm going to go out and do a cash secured put. For my IRA accounts, cash accounts, I'm going to create the spread where I can tie up less buying power and still go after a nice little chunk of profit. So a 190 by 140. I like that trade. Yeah, I like that trade. So let's do this in the cash account. So if I go 130, question is, do I have enough cash if I want to take in shares of Tesla at 190? I'd own the shares around 185, 184, so I'd be okay with that, even for some of these accounts. And I get rid of MO. Yeah, I'm good. I'm going to get some buying power back here in March to the tune of like 25 or 40 grand. I would say if I was going to get assigned in Tesla, I'm going to take this trade. So 190 by 130, that's 60 wide. It's not really about the width here. It's just about defined risk. So I can take the buying power instead of doing this. See how this takes up $18,000 in buying power? That's just a naked put, okay? But if I spread it, now I make it 60 wide. Now it takes up $5,400 and it's a little bit tighter risk. I'd still be willing to own the shares, but I just want to keep that buying power capped. So I'm going to take this trade for $5 and hopefully 40 cents. Let's try. I'm going to try to get a little bit beneficial fill. Let me go here. Let's go. So cash accounts. Let's go. All right, I'm just gonna throw this in for everybody. All right, 190 by 130, like the trade. Everybody gets a chunk. 540 not filling. Let's try 540 mid. Liquid, love it. 540 got filled. Okay, let's go 9732. There we go. All right, so I'm gonna get everybody in the action here for some Tesla. Okay, let's give you a second to get these trades all executed. Nice thing is that is a super liquid instrument, which is why it's one of my favorites for trading options. Let's go this one. Pending at 540, 539. Fill the 539, very nice. So this one, let's go to 5627. Fill to 539. And on this account, I think I'm just going to do a cash secured put. Let's go 190. Okay. 6746. Okay. Got it. All right. I'm going to update that. Trade tracker. New trade in. So Tesla. That is a 1/16/26 expiration. And I put in the spread. So I sell the 190 put. And buy the 130 put. Collected $5.40 credit. And then 1/16/26 expiration. Sell the 190 put. Collected $7.90 credit on that one. Okay, good. All right, I'll add that in. So 190 by 130. I know this. I got a lot of stuff on this, which ratio spreads, and it's a good instrument to trade for options. I'm going to continue to do so. But anyway, let me just put in. I'll build it out this way. Got some flows lighten up. Come on, baby. Get me down to 6. Let me see if we can get 602, 601, 600 by tomorrow. I'd love to see like a fresh low today. Just part of my hedges to play out. Let me build out that risk graph. Tesla. Float this out here. Put in the trade. So this is a sell put and a buy put out to January of 2026. So the 190 right there, and the 130 right there. That's what it looks like. Maybe thinking, oh my gosh, it's so much risk. Well, I'm willing to own the shares. I've got enough cash to own the shares. But that's the trade. So take a screenshot of this. I'll post that in Pulver Alerts. All right, let me update that for my stocks options positions. New trade, Tesla, 1/16/26 expiration, sell the 190 put, buy the 130 put, $5.40 credit. So I'm willing to own shares of the 190 assignment if price is less than 190 and I'm assigned. The break even is 184.59. Well, I guess 184.60. I collected 540 on the credit. Okay, so I'll throw in the screenshot here. And throw in a little disclaimer. Any questions on that one? Okay. Sent. Moving on. All right, let me double check my calendar really quickly. Good, good, good. Okay, good. All right, so that's Tesla. Berkshire, towards the all-time highs. Ratio spread for March looking pretty good. Bonds, anything exciting happening? Not really. Not at highs, not at lows. Little chop fest on bonds. Maybe a little 1-1-1 action on bonds. If the premiums might be terrible, but let's find out. I still have a diagonal spread. We're trading at 21.9. Let's see. I don't know. If I can do something around like the 85 to 82 zone, the premiums may or may not be what I want them to be. So if I went out to April 17th, nope, never mind. Premiums are garbage. So I'd have to trade like bond futures. I'd have to trade probably ZB. If I went 30 years, let me go out to ZB. Check this one real quick. So, I mean, TLT looks pretty similar to ZB. This one, I don't know, man. I'll price it out. I'm curious. So if I go ZB, so I can go out to April 25th or May. As long as I stay out of the way. So as long as we're below like 107-ish, let me see. Basically, it's like the market would have to break. So if I did a trap right there, or even move this lower, maybe trap it here. That's $200 of income for May. Not a terrible trade, but I would have to go risk to find. So 107, maybe to a trade there. Now we get 140 bucks. That's not bad. Ties up way less capital. We'd have to have like a break in the bond market in May. I don't necessarily see that happening. I don't mind this trade. Should be liquid enough to get filled where I want at a 0.9. There is some risk on the trade. I mean, that's a little hefty. If I want to tighten this up just a little bit, maybe going right after like 100 bucks of income. That's 109. Now my risk is $5,000. Probability of any type of risk here. It's like there's no assignment. I'm not taking assignment on a futures contract. Not a lot of buying power. How much do I like this trade? 95% chance of profit. Make 100 bucks, 90 days. That's a lot of risk though. No, thank you. I'll pass. All right, what else? Fed funds rate, 10%. The U.S. 10-year. Go lower. Help the world out. Help the housing market. Help financing. Help business debt restructuring. Help anything. Go lower. Bonds, fine. Go higher. If bonds go higher, though, you got to wonder what's going to happen to the equities market. This like 0.7 correlation is probably going to change. Let me see if there's actually CUBOE implied. Actually, there's something I want to take a look at, but I want to see like, let's go bond to equity correlation and see if I've got a number on it right now. They're supposed to be not that correlated, and they're like 0.7% or like 0.7 correlation, which is quite high. I'm probably not going to get what I want. Bond correlation analysis. Yep. When was this article? This might be along the lines I'm talking about. 0.87. That's ridiculous. That was 2 years ago. All right, never mind. That's not relevant. I'll just rely on my boy Charlie Bilello for that. All right, what else? Any stocks, any requests, currencies? What do you want to look at? Dollar index. Dollar index heading lower. That's totally good by me. If you're looking for a turn on euro dollar, I still think that 106 is a firm resistance level. So if anybody is long, I understand like long and dollars getting weaker, that's fine. But if this area turns, so let's say we come back up here into this 105.50 to 106 zone. If that turns back south, I could see that stop loss above, retest the lows, target 1, possibly a push into parity, target 2. That depends on the dollar catching a bid and going higher. I don't know if that's going to be the case or not, but we'll find out. So I'm not going to short the euro dollar. I think the best place to be watching would be if it breaks that trend line. But I think there's a lot of resistance to that 106 handle, which is about the equivalent of the dollar index turning around the 106 to 105.50. So 106 right in here, 105.50 right in here. I would watch for that zone to offer support. So 106 to 105.50. See if that's going to offer up some support. Gold, fine. Silver, fine. Oil, probably good for a directionally neutral strategy. Bitcoin still accumulating. Markets today, nice little red candle. Seems like my technical analysis from connecting this high to so far this high is looking fine, looking respectable. Maybe we're still not able to make convincing higher highs. Not yet. Look at the weekly time frame. I still think the bar count is relevant. Look at the weekly chart. If this weekly candle gets much larger, then yeah, we're probably dealing with something like this. Lots of this, lots of this, lots of this. Now, a lot of traders could look at this pattern and see, like, I think this is a rising wedge. Well, it can be a rising wedge if it actually breaks and falls back to where it started. That would be a correct move on the rising wedge, and then we would look to scoop up, some type of retracement. I mean, this is a fib that I have on my chart since this bottom in 2023. Okay, just one fib, like pull back to the 23% or 30% or 38%, like that pullback zone would offer a pretty awesome discount if we get it. If we don't get it, this is another thing that rising wedges can do. They can do this, they can do this, they can do this, and everyone's like, oh, it's a rising wedge, I'm going to short the market. And it goes like this, breakout, and it doesn't stop. It just blows it up again. I don't know, but we will probably be staring at some of this for longer. Just saying. So cautiously bullish, as I keep repeating. Dollar Swiss, no trade for me. Dollar Swiss, I'm already out. Long positions close out at 92. I'm not interested in this unless it comes back down into 85 or 86. If we come back and revisit these lows, then I will load back up and take the range trade. If it does break the highs, I'm okay being long. I think there's a big pocket there that can get filled. I just don't love buying the highs. So I would prefer, and maybe this is not a terrible play. You still get positive swap on it, maybe getting like a 38 to 50 to 618 swing, and then look to see if this in fact goes higher. But if you're willing to take a swing trade, I'd also be willing to just dollar cost average into the entire range lows. So it's not a bad trade. I guess the question is, can we find a level support, come back to the highs again, and actually have a run higher, but getting a discount? I just don't want to buy the breakout highs. Okay, looking pound dollar for a long-term trade. What direction? I'm looking at pound dollar to be, a little bit more correlated to dollar index. So I think pound dollar is looking fine for a potential short in like the 127.50 to 128 zone. If you look at this area for resistance, and then you're looking at a shorter term trend line break to see if you get some confirmation to roll over, stop loss above the swing, and then head down. How much lower? I'd say between like 120. I was actually surprised we got up above 3,000. We got this like 3,400 something, but I think between like 120, 130, we might just be range bound on this pound US dollar. So I'm not incredibly bullish on this one. I'm actually looking on the smaller time frame for this thing to turn south. This would be a pretty clean trend line break if we get it. Something like that. Just connect the lows. If we get on the right hand side of that trend line, as long as price isn't making some like crazy run above this high, I could see this area offering some resistance. If we start to break that structure, stop loss above, and then go back and target the lows. If we go lower, move the stop losses, but 120 is probably my target. Okay. The only way I'd flip my trade on this one would be that we're seeing a lot of dollar weakness, and this thing comes ripping up above this high, and then there's a nice little like pullback, and then you go longer term to revisit 3,500. But I'd have to see it break that high convincingly. If it doesn't happen, then I think this is actually a short. Okay, good question. I think that is going to do it for right now. Any other questions, thoughts? Big drop in futures this morning. So 9:30. Yeah, I mean, that was just a big fat breakout at 9:30. Price has kind of stabilized since then. Let me move this to that 9:30 candle. Right there, just a pretty simple trade. Same thing on Nasdaq futures. That is a lot of movement there in 15 minutes. So we'll see. Let me actually zoom in. I'm going to go into like a 60-minute chart here. So, I mean, there's potential support, but man, we got to hold. I think my concern would be like if this breaks this low, there's clearly from all-time highs, there's plenty of space to still have a range-bound trade, and we come right back to these, nasty deep seek and tariff lows, right? So I would keep a close eye on this support, and if this support holds, then sure we can play around with this 1 hour 15-minute candle from today. But if we break that level, we put a price point there. That would be a break of around. If we broke below around 6,100. 6,100 or lower with a convincing break candle, then I think we have room to flush and revisit some of these previous lows. This could be just some big old like sweeps and grabs at these lows, which I'm okay with. That's why I'm hedged. All right, for the remainder of the day, probably, I don't know, maybe a limited price action here. Another flush lower is actually okay. We had a push, pullback, push back down to the lows. Is this a indecision day from now on? Like maybe that's indecision for the day, right? Time will tell. But if this is high, low, little wave structure, and we're still going to sell off, just be aware of like maybe a flush into like 60, 50 today or tomorrow. Tomorrow's a monthly expiration. Levels I'm watching on the SPY, either we get back up to 615 for the week or we flush down hopefully to like 602 or lower, 602 to 600. So right in the middle. If there's enough volatility to carry us through tomorrow, let's see what the follow through is. I'm positioned for both. I've got a profit trade if we get 615, or I need it to be greater than 612 actually, or I've got a profit trade that's actually a big reward to risk. If we get down to 602, 601, I turn like 80 cents into maybe $3 to $4. So we'll see. They got a bunch of hedges too. But all right, I think with that being said, if you do a Jade Lizard, price gets below your short put, will one get assigned the shares? That's what happens in a short put, right? So you can totally get assigned. I mean, a Jade Lizard isn't bad. If I do a Jade Lizard strategy, I wouldn't mind owning the shares. So I guess an example would be this. Let me look at Tesla as a good example, or yeah, Tesla's fine, or even Google. Google's fine. So let me just price out something here on Google. Okay. So, if I've got some space to work with, like a Jade Lizard would be a bear call spread above and a cash secured put below, and you get kind of a double whammy. If I get my cash secured put down here and I put my bear call spread up above, then guess what? Guess what? I can collect credit here and credit here. And if price stays in the middle, then I get paid both ways. But the idea is if price goes up above my bear call spread, then I still keep the credit from the position here. This turns into a loss, right? So I lose here, but the net position is still credit. So I just take a loss in the bear call spread. I don't get assigned, but I still walk away positive on my Jade Lizard, right? So is there a stock that I would like this on? Well, Google's cheap enough that if I said, okay, a 150 put, and then up above, let's say 210, just curious, if I went out like April 17th. So if I do a 210 by 215 bear call spread, and then I sell a put around 150. So right now that Jade Lizard pays me 73 cents. Not a bad trade. Now, what does that do? I'd be willing to own the shares here. That's not bad for $100 for 56 days, like 91 cents. 155. I mean, are we going to 155? Probably not. This low's around 150. But let me see here. Probability of profit's fairly high. That's a low delta. 160 wouldn't be awful. I could still pull in $1.20. There is some assignment risk. But maybe on my margin accounts, it's not a bad trade. So I here this actually to me would be a slightly better trade if this wasn't 5 wide. If this was like 1 to 2 wide, then I'd pull in more credit. I'm still getting $1 for it. We'd have to go back to the highs again, which, yes, no, maybe. I don't know what's going to happen in 56 days. But mechanically, it's like there's only about a roughly 10% chance that we get above, okay, the 210 level. And there's only about a 8% chance that we have any type of assignment risk. Now, would I be willing to own shares of Google? Yes. But I also have a bunch of these trades out here that express the same thing. If Google is below 150, I'm going to take some shares. Below 150, I take some shares. Below 165, I take some shares. So if I add in a Jade Lizard, that's fine, but I'm just going to be compounding, ownership, which I don't really want to do. So what's another way to look at this? Tesla. I mean, because we're so far off the highs, I'm not going to do a Jade Lizard on Tesla. Maybe if Meta wasn't a freaking, actually, you know what? Let's do Palantir. Let's take a look at Palantir. Palantir's had a pretty big whiff to the downside, which I think is awesome. But if I did like a bear call spread up here at the 125, 130, but I'm willing to own some Palantir, I don't mind that. So let's have a look at this one. Maybe I can find a trade that I like. Go out to April. That's 56 days out. I don't mind the April or May expiration. Either one's okay. Let me look at where would I say I'd be happy to own some Palantir. Maybe in the $60 zone. What do I get for a put at $60? I get 60 cents. Okay, am I willing to own it there? Yeah, I'll take some shares at $60. If I go out 30 days, if I went out 30 days, what do I get for an at the money? I mean, there's like $5 to $7 to even $10 of credit on a covered call. So, I mean, it's a pretty easy one to repair. So if I went out to April, sell the 60 put, and then above the recent highs to do a bear call spread, this is the only issue again. Again, I'm going 5 wide. So sell the 125, buy the 130. Again, I pull in $1.26 of credit. It's not terrible. Okay. What's my risk in the trade? Well, if I'm getting price above here, this is a $5 loss. Okay. So I could lose $5 on this trade. I'm pulling in $1.26, which means I could still lose $3.74. That's still my risk on the trade. Right? If price goes up above all the highs. If we stay where we are, then I can pull in this income and it's fine. So what I'd possibly want to do is, I don't know, maybe try to go a little bit tighter. Nope, it's just not going to offer enough premium. Yeah, I'm just not going to get enough. I mean, the trade is fine. There is risk in the trade though, right? So I get my 60 cents here. Like if we don't get assigned, I keep my 60 cents. My issue is if I take this one away, if I delete that leg, I'm only getting 60 cents for this trade, which means I have $4.40 of risk here. So my net risk is going to be about $380. Probability of the trade's fairly high. But I don't know. Let me look at it. $1.11 for a 130 by 135. It's like probability of the trade's pretty high. I don't know. I personally, I like ratio spreads better. Jade Lizards are fine. Reverse Jade Lizards are fine. But I like ratio spreads better. And the reason why is, for me to really max the profit out here, I need price to stay below and stay above, and then price stays in the middle, and I get paid that. But if price were to go up and I take a loss here, well, I get paid on the put side, but I lose and actually net loss on the bear call spread. So I don't love that trade. If I just did a ratio spread, I get the credit. If I get assigned, I want to get assigned. I'd be willing to take assignment, and I can repair the trade. I don't have to worry about the stock going to the upside. So unless you're comfortable kind of calling the top on that Jade Lizard, I don't love that trade over like a ratio spread. Like a put ratio spread, I'm pretty good with. But the Jade Lizard, I got to really like and be confident that like the high is in, you know. And I think for Palantir, a stock like that, I think it'd be safe to say like the high probably is in. For the next, 56 days, are we going to all-time highs again on Palantir? Who knows? But probably not, you know. And I say that because this has been a ballistic stock that now has had a very swift change of direction. So pulling back into this gap, unless this thing catches an immediate bid, which it might, but I would say this is probably going to settle in and, maybe have a bit of reality check. So anyways, that help? Just discussion on it. Gold we talked about. We just poked all-time highs. I still think gold is going to melt up towards the 3,000 handle. I'm waiting for pullbacks to add more positions to it. DAX, we had a recent pullback, which is totally good. I'm waiting to get a pullback to some of my EMA levels. So I'd like to see like at least a 21 or 50 moving average pullback. But dynamically, I'd like to get long. I think long DAX looks good with some dynamic support. Okay. All right. That being said, I'll let you go. Happy Thursday. Let's see where the market ends up going for the day. I do have some profits rolling. If we end up going lower, I can turn an 80-cent debit into hopefully $2-3 credit. I put in 70 cents of bear call spreads up here this morning. As long as price stays below 61.50, that's going to be a full 65 cents of credit today. I did take a loss this morning on SPX for $2.25. So I'm basically kind of playing catch up there. So if I get my credit here and by tomorrow get a net credit here, I wash this trade and I'll still sit with a win for the day. But on the overall, it's like I'm sitting right at my all-time high. I think it was at like 182, 183 this morning. That was a fresh all-time high in the portfolio. So I've got some trades working. Silver's good. Bitcoin's fine. I'm going to look to add some more positions, probably doing some income trades. Wouldn't mind seeing the Ivy ranks increase a little bit on the sell-off. Let's see if there's some follow-through as we come into tomorrow's monthly expiration. Okay, final hour today. Yeah, there should be. It should be good. So my final hour is going to be at 3 p.m. today. Yep, I should be good. Cool. All right, thanks, everybody. Have a good rest of the day. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.